First off, by becoming rich.
Take all your money, buy Bitcoin.
You wake up every morning and say GM.
GM. GM. Saturday. It is the 7th of September. And this is daily levels. So, I wouldn't touch that Nero, by the way. It's clearly a fucking insider pump and dump. Very carefully shilled by certain people at certain times. Would just be on the lookout for that. Now, Bitcoin. So we broke down yesterday. Closed the day with a little bounce with the wick, which is sort of it's not strong, right? We know it's not strong, but it's possibly going to hold at this level for a while. This is an area we're coming back for a retest. Makes sense. This previous cluster of demand, which when you look at the move from bottom to top, you can see that right in here was the point of control. We come down into it, we come back, we retest again. It might go for another sweep. But if this general area holds, it's kind of the last spot that can hold before, you know, really you're starting to look at a return back to 40. And if that happens, let's say, now, when you're looking at price moving back down into previous liquidation / wick support, what you're looking at here is we're making lower lows, we're making lower highs, we're making lower lows, we're making lower highs. What you need to desperately avoid here is not making another fucking lower low if you're a bull. I am, well, you know, I've been bearish leaning for a while. I see no reason to change that yet because everything that's happening is confirming the further weakening. And do you know what the important thing to do is? Just fucking trade price. I go on Twitter and I open up and I see these like 10 tweet threads and long posts about how breaking down exactly why we're definitely not that bearish and we're going to go up again. Just wait to Q4, bro. Or seeing these massive complex breakdowns of why it's all so bearish and why we're definitely going lower. Just trade based on price. Can't stress enough. Obviously, I talk about the news a lot. We obviously all want to talk about what's going on. You don't want to be uneducated. You want to understand what the narrative is, what's driving the market in people's minds. But when it comes to actually investing or trading, I 100% guarantee every single person, if you focus on price over time, you will be a better trader. You will make more money. You will lose less money. And the market will make sense to you more. You won't have emotional swings. You'll be less inclined to make emotional decisions. And it's really that simple. Now, what does it actually mean when I say just focus on price? It's pretty much about market structure and having certain levels that you're bullish and bearish above or below. When did I first get bearish? It was back over here when we lost the value area. Now just think of all the shit that's happened since then. There's been a lot happening, but originally I had drawn this, and at that point the goal was we need to reclaim 62, and if we do, if you remember, I said if we reclaim this value area low, we should go to the value area high. We did that. Then we rejected off the value area high, and over here, or slightly lower like there, I sold my spot bags because of that rejection, because of the movement, blah, blah, blah. Then we went down, and we made a new low, so we dragged this on across to just before the new low, at least that's how I draw it. And then it becomes very simple again. Reclaim this level, reclaim this value area low, and we can start to think about going higher, okay? And we didn't reclaim it. We pushed into it, we come above, we false breakout, we're back below. This is just this volume profile has really been the majority of what I've used for the past 4 months. And throughout all think of all the things you've heard in the last 4 months about really bearish and really bullish stuff. It's so much of it is just cope or hopium or whatever. You can just say, at this point, reclaiming the value area low would be really bullish to me. So at this point, reclaiming 62 would be really bullish. And obviously, above 70 is where we actually go for new all-time highs. Where we're at right now, I mean, it's going lower based on volume profile. Based on the volume profile and the value area, it's going lower. It's either one of two things. It's either going to fill this in, so it's either going to spend a lot of time between 52 and 62, and it's going to distribute a lot of volume there to more evenly distribute it out. But if that happens, the most probable move is actually downwards, because it's distributing value lower. It's building value lower. So you build value here, you move down, you build value there, you move down. That's literally how the market moves, same way on the way up. You build value here, you move up. You build value here, you move up. So we're either building value for a move higher or lower. So you don't really want to see that. So in that sense, it would actually probably be preferable to go down more and go down faster and spend more time lower and leave gaps above that you can then move back up into and rally higher, right? That would probably be a better way to do it. Of course, the best way is just to fucking V-reverse, get back above here and avoid all this breakdown. But that seems unlikely for right now. This is an area where we could have an unlikely sort of inverse head and shoulders, right? You know, basically nobody wants to bid this. There hasn't been a market structure break, which is the main problem, meaning that the breakdown level is there. We didn't break it. So this is a bearish chart. But if it's able to hold in this area, could we see a retracement back up? Sure, we could. But anyway, about price. So you can use volume profile, which is the purest expression of price for me. This is literally telling you where the activity is, where has most trading happened, and where are the levels that bulls need to get above to be in control and bears need to hold to be in control, right? In all of this distribution, basically anybody who bought above here, right, anyone who bought in there is underwater. This also extends to the ETFs. The ETFs have been the trade. The entire year has been all about the ETFs. This has been the single narrative of the market. There has been no other narrative. I want to make that very clear. Crypto has had no other narrative that is anywhere near as strong as the Bitcoin ETF. Meme coins happen to explode because of the success of the Bitcoin ETF. Because Bitcoin went up enough, wealth effect, we went over. AI, very flimsy narrative, had a nice run, yes, but there's been nothing to the extent of this narrative, right? So the primary narrative has been the ETF, and here we are. From the day it launched, here's the value area and the volume profile for the BlackRock ETF. So excluding, you know, the sell the news and then the quick rally, all the vast majority, the bulk of the trading for the ETFs has been above where we currently are. Every single person who bought up here is underwater. Every one of them. So they've either sold, which they haven't, or they're going to sell if it continues lower. We need to, you know, you're sort of wondering where are people's pain, how much is people's pain tolerance? Clearly it's not that great. You had a holiday Monday, then you've had pretty heavy outflows all week. ETFs are back below 17 billion after being at a high of about 18 billion. And you can see why. Now, I don't know how much more there is to go, but coupled with the fact that the S&P is pulling back and closing near the lows on Friday, although that little bounce is, believe it or not, is quite important. Not really much. There's going to be a retest, but didn't close right at the lows. It was, but obviously bearish. I mean, I talked about this, just a lower high bounce, rolling over. This is a move that's going to probably retrace back to support. And you've got the election coming up, so you tend to go sideways until the election. The problem is, I think the biggest problem is that people think that that means the election is somehow bullish, meaning, no, it's fine, we're just going to consolidate, we're just going to pull back to the election, we're just going to do this, we're just going to do that. You know, it still comes with the assumption that, no, let's just make it through the election, then we're fine. But don't you notice something happening? So we got past the halving, and then it went into the summer period, and then people said we just have to get through May and then we'll be okay, and then that was bad, and then they say, well, we'll just get through summer. Summer's a low volatility period, and then that was bad. And people are like, no, August, September, we're going to fucking fly because there's going to be a bullish Q4, definitely. And so people are going to front run that. And of course, August was terrible. And September is not great so far. And now people are saying, no, well, don't worry, it's just the election. So let's just get past the election, which is November, by the way, halfway into Q4, which is supposed to be bullish. Let's just get through the election. There's a lot of after the fact explaining that people do to try and sort of come to terms with the fact that their bags are fucked. Instead of just saying, my bags are fucked. And this again loops back to what I said. It's just price. Just trade price. There is a major higher time frame shift that can happen for the ETFs, which are the thing that matters at the moment, which is going here. That is something that Bitcoin has not done since May, right? It has not had a major market structure shift. We've had down, higher highs, higher lows, weak retracement bounces, brief reclaims, I guess, but it didn't make a new high. Failure to return, lower highs, lower highs, lower highs. Whenever or however the ETFs start to climb back above there, that is undeniably at that point a bullish shift. And that only has Bitcoin at like 64, 65. So it's not as if you're going to miss out. And can't you just say, until then, I'm neutral / bearish? Of course you can. So, when we talk about, again, I'm going to probably make this just mostly a mini lesson, because it's Saturday, the market doesn't tend to move much. By the way, if the market's going to move anywhere today, it's probably going to be down, where people panic further and continue to sell off. If there's going to be a bigger collapse on Monday, you'll probably see red Saturday, red Sunday. If we see Saturday and Sunday holding flat, that's probably decent. If you see Saturday and Sunday rising, that's not great because it's probably just a squeeze, which we can also see. I'll talk about that in trade of the day, but I'll map those paths out later. Friday was really the directional impulse. Friday was telling you what the market really thinks. Saturday, Sunday, we'll see. But, so you use stuff like this. So one way to talk about price is saying, okay, if I want to be bullish, I want to see price confirmation. That means, first off, reclaim the value area low. Secondly, get above the POC. Third, break from value area high. And you can do this on any time frame. If someone tells you they're bullish on Bitcoin on the 1 hour, you say, well, why? Well, it's usually reasons, right? Well, it's Friday, bullish Fridays, or there's going to be news coming out, economic data, non-farm payrolls, or people have way too many ideas and reasons, and fucking somebody tweeted something and all this kind of shit. That stuff's never gonna win you anything. You're never gonna make money with that consistently long term. You can be fooled by randomness. You can buy something and then somebody can tweet about it, or big announcement come out or whatever, and it can pump, and you'll be like, holy shit, I'm so smart. No, you're not. Do that 100 times, you'll lose money on balance. So what listening to price means is, if it's doing this, you can be bullish. If it's doing this, and people are saying, why aren't you bullish, bro? Why aren't you buying the dip? You say, because it's still fucking dipping. I'll buy the dip when it does that, when it shows a sign of not dipping anymore. So at least I know where I'm wrong. And you have to be okay with being wrong. Listen to price, because it will tell you where you can be wrong, which is more important than where you're right. It's far more important to know where you're wrong. If you listen to price, it's like what I said the other day, where if this goes lower, let's say we set a kind of sideways here, and then we push down one more time into that retest, and then we come like that, and we're like here, right? And we have a lower time frame structure break, and we retested that long wick. At this point, getting long makes all the sense in the world, because you know exactly where you're wrong, right? You know you're wrong here, below kind of 49, or at 49. You know you can enter here around the kind of 53, 54. And you have a market structure shift, an early one, in your favor. You've had a retest, a double bottom. You've had a retest, a demand. And you know where you're wrong. That's all that really matters. Anyone buying here has no fucking idea where they're wrong. Anyone buying at 58 has no idea where they're wrong. Right? Like, what are you buying there for? What confirmation have you got? Fuck all. If you want to do that, then you have to put your stop there. But then you're buying into a downtrend that is moving towards your stop. Like, think about it. You're buying into a downtrend that is moving towards your invalidation. Instead of waiting for something to form and move the other way, so it's tried to go towards where your stop would be, and now it's moving up, moving away from your stop. That's the point. That's when they say buy on the way up, sell on the way down. That's what that means. It doesn't mean wait till price is here and then buy. It means wait till the very earliest point that you can see realistically the price could be reversing. And that's usually something like that. That's usually where it comes back above a market structure level, break, comes below it, and then gets back above it again. Not when it makes a new high. You can say when it gets back above. And you can say that's the absolute earliest point where I can get long here, stop here, because if I'm right, it's going to continue moving in the other direction. If I'm wrong, then good, I know where I'm wrong. But most people will try to buy here before there's any confirmation, and their stop loss is just somewhere random, like there or there, and it gets stopped out of course. Like, don't fucking fight the market. And what else? So yeah, use stuff like volume profile, use stuff like market structure is the fundamental. Market structure breaks, under, over, under, higher highs, higher lows, and then consolidations. Things like Wyckoff, right? If you're seeing like and it's just really any sideways range, whether it's a Wyckoff or not, it's either going to break to the upside or to the downside. And try and identify strong breaks on either side, and know that you can say, okay, if it falls back inside below the midpoint, or it falls back inside below the midpoint, above the midpoint, I'm wrong, right? When you're actually getting a breakout from some kind of consolidation, it shouldn't come back. The breakout should just break out. So, what else? Solana is getting to the point where, how is it not collapsed? But then you get to this point, you're like, it looks so bad, and it should break down, and it just can't break 120, and you're like, this looks like fucking shit. I would never buy this. Couldn't bid this here, and I won't, and I wouldn't, because same thing. You don't have any confirmation, right? Funny enough, with the way it's kind of chopping, if Solana goes up here, there you have a break. There's a high that leads to the lowest low. It's a very low time frame shift, but you know you're in validation. You get back above. You could have a stab at along there. It's not a bad place to have a stab at along. But be prepared to be wrong. But someone's supporting Solana, and I guess it's some big backer or VC or big firm or whatever. Probably Galaxy, one of them ones that was doing the sol distributions or whatever. And I feel like Solana probably has there's probably a lot of pain below here for Solana. Meaning, like, big players are betting on Sol to not go below that level, or they have to sell, liquidate, whatever. And when the market gets like that, it usually wants to go and hunt that, right? You have to understand, the markets are a game. The game is about causing maximum pain. The game is about smart money stepping in when dumb money gets wrecked. So when you see charts like this that are just falling to pieces and hanging over and looking like shit, it might not end up breaking down, but understand that if it does break down, lots of those smart money people, lots of those patient fucking whales who wait for the blood in the streets, they're going to get their blood. It's going to be at the expense of other people, and that is quite often what markets want to do. So we wait. I want to go back. VWAPs, yearly VWAP. This is another one that I want to look at on a bit of a higher time frame view. Yeah, this is no longer a trending market in any way, shape or form. Trending moves don't tend to go below the VWAP, right? We did briefly in 2021, but the trend was over. So people still call this a bull market trend. It wasn't. The bull market trend ended here. We then got basically like a range trade where it went down to a low, came up, took out the range high, came back to the low. So it wasn't a trend. And again, trending moves. Trending move does not go below the value area low, or sorry, the midpoint, the blue line. When it goes below the blue line, like 2019, you make it all the way to the side. So that's Bitcoin. And it's not just below it, it's trading below it, it's staying below it, it's fully lost it. So we are in a downtrend / consolidation at best based on VWAP. It's not really like breaking news, but many people still seem to think this is a trend. It's not a trend anymore. Value area for the year. Let's do that. So developing value area. Let's go from January 1st to today. And let me take this other one off. So here's our yearly value area. Same story, right? So from the start of the year, including January, from everything, all the way up to now, here's where we're at. As this develops, you want to see price not distribute for fucking 6 months and then go lower. Because that means we are now in a new range if it loses these levels, which means we go down and we distribute value in here next. That's just the assumption of how volume distributes. If it starts to fall into gaps, which it's doing, it fills them. As soon as we fell into this gap here, right, there was a gap over there from these 3 candles. As soon as we fell into it, we started to come back more and fill it more and fill it more and fill it more. And now what are we doing? We're filling it in fully. And that's why you really don't want to see price going down into these gaps, because once it starts hitting them, it tends to come back and fill them. When I say don't want to, I mean fucking send it lower. We're traders, right? We're not moon boys. But of course, bull market is preferable to bear market or sideways market or choppy, whatever the fuck you want to call it. 2023 value area all the way across there. Not that this is going to be particularly relevant. Yeah, goes all the way back down to there. 2022. I guess it's worth drawing them all. I haven't done this in a while. 2022 looks like this. Same value area high for 2022 and 2023. Nice confluence there. 2021. This will be interesting. Yeah, we're not far off the value area high of 2021. Pretty important that it does not go below there, for sure. And you can see it's so far trying its best not to. And I think that's really important. And I think if Bitcoin were able to, you know, stay around like that and not actually break into it, which by the way is what I expect us to do. You know, this isn't going to happen. This kind of thing could, because people will capitulate here if it goes sideways for a month or so. You know, it bounces up, it comes back and bleed and bleed and bleed. And what I expect, if I'm just, you know, let me see if there's an example. What I expect to see next is the market, again, if we don't break down soon, it's the market looked like it's going to break the low. So there you have a low, and we come back, and it's going to break it. It's going to break it now. It's got to break it. It's got to break it. It's got to break it, and it doesn't. Obviously, then FTX collapsed. But point being, you have this low, and it just seems like it's going to break. It seems like it's going to break, and then it doesn't. So, like, that's probably absolute best case scenario I could see at the moment. And even that's kind of wishful thinking. But it's not all bad. ETH is red on the year. GM. So, no, I'm telling a lie. Since this morning, ETH is actually green on the year. So congratulations. ETH is officially green again. GM. But, what do you do, man? That's about it. So, my approach is going to be not do much. I'm in a swing short at the moment. It was a day trade from yesterday. If you saw the live trading stream, you'll see that. It was a day trade, and then I turned part of it into a swing because I think we might collapse more. I don't think we necessarily will, but it's worth leaving a little bit open. And I'm interested to see what happens now over the next couple of weeks, because we are very much reaching a period of disillusionment, but we are not, and I have to be clear with this, there are still loads of people who are very, very happy and optimistic and saying, this is just a shakeout, bro. I mean, like, the vibes are not that bad. The vibes are not that bad. If you've traded through multiple cycles, or even just for a few years, we have not reached May 2021, June, July 2021, right? That level of disillusionment, which is why the market was like this here. And it's not about like, oh, it's going up, it's going down. Do you know what? How can I describe this best? The best way I can describe it. People still have an opinion, right? Tweets still have loads of comments. Videos on YouTube still have loads of views. TikTok still full of fucking crypto stuff. It might be bearish stuff. It might be leaning more bearish. Typically, a sentiment bottom comes when people just give up. They don't even care anymore. Complete apathy. Right? They just say, fuck this. That's what people did over here. It just disappeared in that last bleed. That's definitely what happened after FTX. Just disappeared in that bleed. And it's what happened last summer as well. After that collapse, just disappeared. People just died off. You can tell this by the chart. There's still way too much volatility, even though it's going down. It's like once it starts to just do this, and people say, fuck crypto. But I mean, the thing is, if Bitcoin does this, people will probably say, oh, look at that. It's not going to break down. They'll probably still stay optimistic. So I guess it would be like a slow bleed, actually to new lows, and then like that. And just feel like, this is dead. This is going to fucking zero. And then away we go. Now, of course, it's not going to do this. My point is, you almost always see a complete disintegration of anything even remotely looking bullish, where no one looks or feels or does anything or says anything bullish. And so, I mean, we'll see. We'll see. That's it, GM. Weekend workshop today, 4 p.m. UTC, live stream. Going to cover trade management live. Remember, the weekend workshops are only up for 24 hours, unless I forget to delete them like I did last week and it stays up for a week. But that won't happen again. Weekend workshop, trade management. How to move your stops in a trade. How to add size to a trade, known as compounding. Strategies for moving stops, moving invalidation, taking profit, when to not take profit, taking profit multiple times like TP1, TP2, etc. All about how to manage a trade, emotions in a trade, and so on and so on and so on. See you then, GM.